Hello and welcome. You're watching Countdown right here on Bloomberg Quint. Yet another day of strength on the Indian indices. The Nifty as well as the Sensex trading with gains of about 0.5%, primarily driven on the back of the fact that crude oil has come off significantly. The currency has strengthened on the back of what has happened with the RBI and the additional OMOs that have been announced. So it is cheer on the Lal Street. Let's take a look at the internals in just a few moments, but let's run through the headlines for now. It's a positive day of trade for the markets. The Nifty heads towards the 11,000 mark. All sectoral indices, barring IT, are trading with gains. Continued appreciation in the currency is weighing in on IT and pharma stocks as they form the top 5 losers on the Nifty 50. Capital First and IDFC Bank are seeing gains of over 5% after announcing that the merger came into effect from yesterday. And US President Donald Trump warns the Federal Reserve of making yet another mistake ahead of the widely expected rate hike. Good afternoon, Neeraj. 7th straight day now if we manage to close the day in the green.
Certainly looks like we will. So that's actually good news. But yeah, strong moves, and we've been talking about it all through. Let's talk about what's moving and what's not in the session today before we get to the more important discussions. Actually, this is probably the most important one, and which is what the markets are doing, 0.5% higher. A bit of a step back, but nothing too alarming really. The mid caps and the small caps too, I presume, are trading comfortably in the green. And this is the heat map. Let's first talk about what's happening on the index. IT, and yesterday they corrected a bit. In today's session they are correcting further. Infosys down for yet another day. HCL Tech actually recovered some bit of lost ground yesterday, but it's down about 2.5% today. We also have Tech Mahindra down about 1.5%, TCS about 1.5%. So Nifty IT is the only spoil sport. You could argue that one, the defensive nature, and right now it's not a defensive market. Two, that the currency is appreciated quite a bit. That might be weighing in as well. So multiple factors, but IT is certainly under a bit of stress today. Private banks, look at IndusInd Bank, Kotak Bank, HDFC Bank, a small pullback in trade, and which is why I think the market is a bit tempered. Had the private banking stocks done well and IT not done too badly, we would actually be looking at a % gain. What's doing well though? High beta. And high beta private banks are doing well, by the way. So Axis Bank is up about 4%. NBFCs, by and large, the OMO, the easing liquidity, all of that. Indiabulls Housing Finance up 7%, Bajaj Finance up about 3%. I'm sure some of the others, SBI is up about 2.5%, HDFC up about 1% as well. So, well, sizable number of NBFCs in the index and outside are doing rather well for themselves. And Dewan, I'm sure you would be seeing some of those, because when I looked at the mid-cap index, it was peppered with gains to the NBFC space. Well,
a lot of them actually, Neeraj, and we talk about all of that and more. Few pockets though have seen a weakness, so not just a large cap IT, mid-cap IT too has witnessed some amount of selling pressure. But just to quickly highlight what's been happening on the indices, and the start of which the mid-cap and the small-cap index are doing their fair share. So a few stocks there, Dish TV, Bank of India, Jubilant Foodworks are some of the bigger movers in today's session. You've got the likes of most of the names from the IT pack, like I highlighted. That's where the pain is in today's session. So mid-cap IT names are about 1% lower for my entry after yesterday's thump down. Emphasis down 1.7% yet again after nudging 1,000 plus in yesterday's session. The stocks back down to about 987. And Tata Elxsi, another one that loses out in today's session. Real estate stocks, that's the flavor as well, not just NBFCs, but Realty as a pack is doing a good job for itself in the last few trading sessions nonetheless. So Indiabulls Realty is up 7.5%. DLF is up 6.5%. And the Godrej Properties at 690 now, making its way towards 700. Among some of the stocks which are gaining on the back of volumes, you've got the likes of Enori and Cement, which is up 5.5%. Good volumes in that. NBCC 9% higher. The stock trades about 2.8 crore shares, which is definitely a much higher number than its last 20 days average. NCC is the other one that trades with gains of 4.5%, and that too has seen volume of about 1.4 crore shares. But let's toss it over to Agam, who's joining in right now to take us through what's the action in the futures and options space. Agam.
Well, Devina, we are seeing gains in the Nifty 50 index right now, about 0.5% higher, and some longs building in there too as well, considering the change in open interest that we're seeing as far as futures are concerned. 3% added in OI. Coming down to the Nifty banking futures too, we have seen an 11% addition towards open interest. Again, this is largely towards longs at this point in time. It's bringing up the India volatility index. That's the other one that we are keeping an eye on on, well, that has likely come off. Okay, it's largely flat, but we're expecting this to come off to a certain extent as we move into the final couple of weeks of trading this December, considering on the expectations that we will have reduced institutional activity in the futures and options space as well. But when it comes to your change in options, again, in terms of changes, we really don't have too much increase or decrease as far as open interest is concerned. However, more writing in the 10,900, 11,000 puts. At this point in time, looking at a 200-point range with the 10,800 put and the 11,000 call with the maximum open interest. Talking about stocks, first one is Bank of India. This is a stock that we had addressed yesterday as well, where we saw increased activity in buying of the 90 and 92 calls. And today we are seeing, well, that trend continue. Another 5% added with a 15% increase in open interest towards fresh longs. Staying with the financial space, L&D Financial Holdings also advancing in trade, and this is not just it. There are a whole host of other NBFCs which are also advancing in today's day of trade. But shifting focus then to something like your realty sector, DLF is a surprising move as well, longs here, and MRF from the tire space is also making a little bit of an up move, so bringing up MRF as well. We have about another 2% increase there, and open interest increase of around 10.5% towards fresh longs. So a lot of winners in today's job trade, with a lot of longs building into some of these winners today.
Okay, Agam, thanks very much for that. So that's the futures and options space, and like highlighted since yesterday, it's Bank of India, one smaller banking name there that's doing really well for itself. 96 now at the last count. Well, moving on, it's going to be important to watch out for what comes out of the Fed this evening in terms of a rate hike, because everyone's been waiting to see what is that decision going to be. The two-day meet of the Federal Reserve began last night amidst declining markets on Wall Street and a near public standoff with President Donald Trump's consensus has it that the Fed is likely to end the year with another rate hike, something which is unlikely to go down well with the president or his allies. But politics aside, is a rate hike really warranted? What would be the economic implications of another rate hike? Will the Fed continue to persist with its aggressive stance in 2019 as well? Let's pose all of these questions to our guests this afternoon. Joining us on the show, we've got Nick Parsons of Thomson Lloyd Group and Gavin Parry of Parry Global Group joining us on the phone line as well. Gentlemen, thanks very much for taking up the time. I'm going to start off with you, Nick. And what's the word on the street? I mean, you know, we've got a near public standoff. You know that the president won't be particularly happy if there is another rate hike that comes about.
Mm-hmm. Right, well, good morning from London. I think what's absolutely clear is that the Federal Reserve has to raise rates by 25 basis points today. Now, there are two reasons for that. One is, of course, that the Fed has to assert its independence. It has to show that it's free from political pressure. But the second reason relates to market psychology. I think the absolute worst case for the asset markets globally today would be if the Fed left rates unchanged, because all my experience in financial markets tells me that if the Fed left rates unchanged, there would be panic on the street. There would be panic that somehow the Fed knows something that the market doesn't. Of course, the Fed doesn't have any more information than the market does. In fact, the Fed takes most of its cues from the market itself. But I can be absolutely certain that if there were not a rate rise today, you might get a very, very small knee-jerk positive reaction, but it wouldn't last, and I think it would be followed by panic in equity markets.
Interesting. Gavin, Parry, Nick Parsons speaking about a possibility of a pause today. Is that in the realms of your probabilities, or would you reckon that a hike is certain, but the commentary could be dovish?
Good morning from Hong Kong here as well. Look, I agree with Nick. I do believe that the Fed will move for another tightening round. I do, though, think that it will be accompanied by a fairly dovish communication tone in the language. And as Nick rightly pointed out, it's that communication tool that the Fed has that is as effective, if not more effective, on the psyche for the market. I think, we're obviously in very uncharted waters when it comes to central bank policy at the moment. We're in a state, history-wise, that has no precedence. And I think we really need to put things in perspective and go back to, let's say, the put of Greenspan past with long-term capital management. And in that respect, Nick's quite true and correct in the fact that they're also having to look at not just inflation from the basket point of view, but they're also got their eye on asset prices as well. And the US economy is ticking along fairly well. I mean, it has fairly historic low unemployment at the moment. There is growth there. But again, I will reiterate what Nick said. It does need to keep its independence. But I think it's more the put aspect that is kind of being taken off the table here, that I also do get the feeling the Fed wants to get ahead of any hypothetical inflation that could be pushing through the economy.
What's going to be more important, and I want to come to you, Nick, with this, is going to be in the language post the statement and post the decision, and whether or not the earlier projected 3 hikes by next year will be toned down to maybe 2 hikes next year, and how that progresses.
Well, Jerome Powell is a very clever man. If you look at his recent public pronouncements on rates, most of which were misquoted by many of the newswires, he did not say that rates are close to neutral. He said that if policy rates are close to the bottom of a range of estimates as to what the neutral rate might be. So I think there he showed us how what a clever wordsmith he is. And I expect a clever form of words this evening. And the form of words I would expect is to be very upbeat about the US economy, because one of the key concerns of asset managers globally and analysts globally, and indeed all your viewers and investors, is what is the economic outlook for 2019. And I think Mr. Powell can actually do a lot to dash those concerns. I think he can be more accommodating on inflation. He can point, for example, to inflation expectations from the TIPS market. He can say that inflation expectations are under control and falling, that they are reinforced by the recent decline in oil prices, but he believes that worries about the global economy and the US economy in 2019 are unfounded, and that he sticks with the growth forecast that he's got. So I think, yes, it would be a dovish hike to the extent that is going to reduce the dot points, but I think it could be bullish in terms of the outlook for the US economy. Now, if that were the case, that's probably as good as it's going to get for the equity market. Any deviation from that sort of script, and I'm afraid we're going to be probing the downside once more.
Right. That's probably my next point. And Gavin, do come in on this, because it's going to be interesting in the backdrop of, the trade wars and what's been happening to the global economy and concerns regarding the US economy. I mean, they have to walk a really fine line in order not to sound overly too concerned and maybe have a gradual downtake and just move down a notch at a time and not make it sound too alarming at the same time. So it's going to be, have to be a very cleverly worded statement coming out from the Fed chairman.
No, totally. I mean, if you look at what Bernanke's comments were post leaving the chair, I mean, he had a private $200,000 per plate luncheon where he said there will be no rate normalisation in my lifetime. And I think that's something we need to keep in perspective here. We've gone through effectively a decade of massive liquidity expansion in the system. So, economies and also corporations to a degree, they will actually adjust to the environment. And over a period like that, even a small raise in basis points for tightening of monetary policy is going to have a more of an amplified effect. So we are going to see a period here, and we are kind of seeing that in relation to the yield curves coming in. And that's more, I think, a reflection of not a recession coming on, which traditionally, some inversion precipitates. It's more a case of the volatility we're going to experience as we see these things compress. to kind of wash out the fact that we're at the tail end of the QE now. And we actually probably expect the Fed, as opposed to raising the cost of capital, will decrease the access to capital as a predecessor to actually moving to any kind of tightening cycle, just purely due to the fact that the amount of liquidity and the amount of the balance sheet, and they'll be able to allow some of the shorter dated stuff to actually mature as opposed to rolling over.
Interesting. Nick, my final question is a follow-up to your earlier comment, wherein you mentioned that if there was a pause, then there could be a knee-jerk positive reaction, but post that, the markets would see a precipitous downfall, if I heard you correctly. Why would that be the case? Because I thought that the base case that the markets are going in is with a hike and maybe dovish commentary. If the markets actually get a pause, then wouldn't the markets view it as a very dovish sign and therefore not get unduly worried?
Well, I think you're half correct, if I may put it that way.
Sure.
I think the markets would, of course, take it as a very dovish sign, but then I fear the markets would panic. Markets would ask themselves, what does the Fed know that we don't? What is the Fed seeing in 2019? What information has the Fed got about the progress of trade talks? What is the Fed hearing and seeing from other central banks around the world? What is the Fed concerned about in the banking system?
If I can,
what do they know that we don't?
Nick, if I can, just to interrupt, that would the performance of different asset classes also weigh in when Fed is making this decision? It may not be necessarily about what the Fed knows that the market doesn't, but the Fed juggling in various balls currently while trying to make this decision.
Well, I think it would be different reaction across asset classes. One that I would be particularly keen on is precious metals, and gold in particular. Gold's up $25 over the course of the last month. It's perilously close to its 200-day moving average, and a break through that at 12.53 is going to send gold roaring. It's going to send the commodity markets higher. I think it would certainly benefit EM over developed markets. So I think there would be very different reactions across asset classes. But I think the one that would suffer most if the Fed didn't move today is going to be developed market equities, because the relief rally that we would see, I think, would be very, very short-lived, because straight away the investors would be asking themselves, what does the Fed know that we don't? What bad news is not just on the horizon, but is immediately round the corner? I think that would be a terrible policy mistake.
All right. We're completely out of time on this discussion, but it was a real pleasure getting your thoughts on board. Nick as well as Gavin, appreciate both of you joining in this afternoon. Moving on, SEBI Chairman Ajay Tyagi voiced his concerns over the lack of primary offerings this year, and there is a reason to be worried. It may be triggered by the recent volatility, but the fact is that there have been no IPOs in the last 3 months of 2018. So the recent up move proved enough to get back companies to the primary markets. S. Ramesh, the MD and CEO of Kotak Investment Banking, is joining us on the show right now to share his views on this matter with us. Mr. Ramesh, thanks very much for taking out the time. Obviously, this is a little bit of worry, because in the last quarter, absolutely no IPOs have hit the primary market. The market volatility being cited as one of the key reasons for that happening. Your comments on that?
Yeah, so I think if you look at calendar 18 in terms of issuances, both new issuances in IPO as well as QIP, it has been a tepid year except for the first 3 to 4 months of this calendar, when we did see some vibrant IPO activity. I think you outlined volatility. I would add to it to say that there have been market-specific and global events, both in parts of the world as well as in India, which have not made it very conducive for investors to take new bets. And in that backdrop, I think we've seen muted capital market activity. I must, however, point out that if you see the filings that have happened with the regulator for IPOs, I think that has continued, and therefore there are a slew of filings which have either got clearance or still pending. So that is the pipeline. But just now, our judgment is that there may not be too much interest from investors to look at new stories. This may continue for a while. And you're right, volatility is never a friend of the primary markets. So they just make it that much more challenging to see through issues. So we don't expect too much vibrancy for the next few months on this front.
The fact that 70 companies seeking to raise more than 60,000 crores that have the SEBI, the market regulators' approval, but are still sitting on the sidelines to actually make an entry into the secondary market. How long? You said for some time you do expect not too much of an activity in the IPO front. When does that change according to you? Because once we see our run up to the election start off, it's going to be another round of a little bit of lull and a little bit of waiting on the sidelines to see what happens then.
Yeah. So, our view on this is that you're right. I think there are India-specific events that are going to be in the forefront of action, elections and other stuff in the first 4 to 5 months of the next calendar. So as the primary market starts to look a little better, we think this will happen post the elections. And in the early part of the second quarter or the early part of third quarter, we do see select IPO issuances to happen. Therefore, we are not seeing runaway action in the first half of next 2019. We also expect the first REIT listing may happen sometime in calendar 19. That's a new introduction to Indian capital markets. I think we have reasonable optimism to believe that that will happen. I will only put one caveat at the end of what I have said. I have seen in many phases of Indian markets over the past many years that markets tend to surprise you both on the upside and the downside. So that will be my caveat. But subject to that, we think it's a cautious market for some time, after which once the election results are out, there is more clarity on some of the trade issues. Brent is more stabilized. I think that's when we think more recurring primary market activity is likely to happen.
Aside from that, aside from the IPOs right now, could you lay out how it's been in terms of the overall fundraising activity that we've been seeing in the last quarter gone by, be it in the form of QIPs, the other pocket which is mergers and acquisitions, and how has it shaped up so far?
So I'll divide my answer into two parts. If you look at QIP activity, 2017 was a record year for QIPs. We saw, particularly in the FIG sector, we saw a lot of action. Lots of big QIPs happen, all went through successfully. But if you look at this calendar year, QIPs have been muted. Understandably so for two reasons. One is a lot of the banking, NBFC and the FIG sector QIPs, they've already sort of stood up on capital adequacy. They don't need to come to the market again. The core sector, I think there has not been so much investor interest in looking at QIPs, so that's why it stayed muted. But the one segment that has stayed vibrant, even in the phase of 2018 on the back of doing well last year, is the financial sponsors and private equity. I think that investing, either buying off existing stake from other PE investors or investing into new companies, I think has continued unabated. In fact, it's done very well this year. Additionally, we are also seeing private equity and financial sponsors taking control, shareholding in many new companies. So this segment is at the brunt of creating entrepreneurship in India, and we think this will continue in great vigor.
So, when we're talking about deals that have happened so far, inbound deals, outbound deals, we're seeing a digital space and particularly the FMCG space, there has been a lot of interest that's been coming about. Where has it been that you're seeing the most amount of interest in terms of private deals taking place? Which sectors are going to remain in focus now?
So if you look at the mergers and acquisition space, and if you divide them into inbound, domestic and outbound, I think the domestic action has been spurred on the core sector more on the back of IBC situations. We also think that should continue through for some time, definitely in 2019. When When you look at inbound, I think inbound has been more restricted to select interest in the fixed space, but definitely a lot in the digital space. So I think we expect that trend to continue. You did see the Walmart deal happen into Flipkart, forgetting at which entity level it happened, but that is an example. And outbound deals have remained steady. They've had a steady growth. Every year there is a certain percentage of 15 to 20% of the M&A deals that happened in outbound. I think that has continued this year as well. Now, when you look at sectors, I think I talked about the core sector and the manufacturing sector for the IBC type of situations. The other sector is FIG, and we have seen select interest in pharma and healthcare. I think that has continued. And then most of the other action is in the digital and the new age space. The one other point I want to emphasize on the M&A side is the resurgence of the domestic acquirer. I think that's a theme that started playing out in 2016. We saw it in 2017. And we do think that's sort of continuing to play this year as well. So there are domestic companies and domestic entrepreneurs with aspirations who are buying businesses. And that will also continue to be one of the catalysts for the M&A business doing well in the year to come.
What is the overview with regards to, you briefly mentioned a lot of interest, particularly, private equity interest that's coming in. So from an Indian standpoint, have the deal sizes increased considerably on the private equity side? And then again, pockets like technology, the BFSI space, is that interest consistent? Because that's where much of it is right now.
So if you look at the financial sponsors and private equity, in general, if you go back a decade, maybe 35 deals or so happened over a 50 million deal size. And if you look at the same space today, that number is definitely more than 100 that's happening. Now, you have to look at it in two perspectives. This is new investment that's going into companies, which means these companies will grow. They have got the catalyst in the form of capital. I think there are aspirant promoters behind this. And this in times to come will list, there will be exits for the financial sponsors. So that's one form of action that will happen. The second is that a lot of private equity investments started in India between 2009 and 2012. A lot of them sort of exited between 2016, 17 and 18. This year, we at Kotak Investment Banking were in the middle of two large situations where financial sponsors actually sold a majority stake. And the incoming people were also financial sponsors who sort of bought into these companies. These are large deals, definitely more than 5,000 crore. So we are witnessing a number of deals of this kind where financial sponsors are beginning to sit into companies in the form of controlled shareholding, and they are building managements. And in a way, this is creating professional entrepreneurship, a new form of entrepreneurs that are going to be in the country for long. So we see this trend continuing quite well, not only in 2019, but also in the years to come.
Just one last question, Mr. Ramesh, before we let you go, on the current situation where, if at all, you are seeing existing stakeholders who have previously invested in companies, who have private equity in companies, whether or not concerns regarding the current functioning of a particular company or the environment that we are in, which raises concerns, is prompting them to move out. Are you seeing an outflow and a probable reversal of the investments that were made earlier on? Is that happening?
No, I think we are not seeing any of those situations too much. In general, what we have noticed with financial sponsors is that when they are engaged with a company when it is unlisted, I think they tend to bring good governance practices wherever there are instances of misalignment with founders, either on philosophy or strategy. I think they have an amicable way of settling that. So we have really not come across accidents of this kind where they have exited. In fact, to the contrary, if you look at the exits of the last 3 to 4 years that have happened, we are actually pleasantly surprised that many of the exits have happened aligned with the promoters between strategic exits and PE to PE exit, much more than what has actually happened in the capital market. So I don't think that situation exists or is a cause of concern, at least from what we have seen so far.
All right. Mr. Ramesh, it was a pleasure chatting with you. Thanks so very much for joining in. Appreciate you taking out the time.
Thank you.
Mr. S. Ramesh there of Kotak Investment Banking.
Okay, let's move on to other pieces and get in a view from M&M. They've unveiled the new compact SUV XUV 300. Yatin caught up, was at the launch, of course, and he caught up with Rajan Vadhera of M&M and began by asking if it's a conscious strategy to call it XUV given the success of its senior XUV 500 brand. Listen in.
Yeah, obviously, I think we have built a very good brand around XUV, and also the design inspiration of XUV was from Cheetah. And we felt we could get in for a similar inspiration of a smaller sibling. And that's how the XUV 300 was on the drawing board, getting its inspiration from the Cheetah. And you can see a similarity between these two products. And we did want to leverage the XUV brand, which is doing so well for us.
Sir, in terms of product and in terms of the platform, you are leveraging SsangYong here. Can you tell us what are the features in this particular car, and how really do you look at it from the export markets as well? Because this is an international design product, and what are the plans on that front as well?
Okay, so as you said, we have taken the platform from FOMC, and X100 is the platform on which Tivoli was built. Okay. So the same X100 platform we have taken to build now XUV 300. And the platform is largely the floor, the wheelbase, and the suspension parts. So all that is common, consequent to which the very high-end platform having all 4 disc brakes. So this vehicle comes with all 4 disc brakes. Okay. The top body and interiors are completely new design. Powertrain is our own powertrain. So therefore, power, torque requirements, stance of the vehicle, ergonomics are completely different from the Tivoli vehicle. Platform is common, and we have packaged very high-end features. In this segment, we have packaged sunroof, we have packaged 7 airbags, we have packaged dual FATC, and there are some more features that we would want to talk at the time of launch. Okay. But it's fun to drive vehicle, very aerodynamic, very highly refined, and it's a piece of engineering excellence. Okay.
Sir, in 2019, you will be with Marazzo, which is a new product, and you will be launching this product. In terms of growth, for your, what do you call the utility vehicle business, we have seen strong growth, almost 40% plus. So do you think with this product and the kind of product pipeline that you have already, you'll be able to maintain this growth momentum? And more importantly, what is the market share expectations when we enter 2019?
These 3 products are definitely going to add volumes to us, and decent volumes. And with that, the market share will go up. What exactly is that figure? I'm not in a position to state that, but definitely you can see all three products put together. The kind of numbers that we are gunning for is more than 10,000 units a month.
Right. And that will give you a strong double-digit market share?
Yeah, strong. We already have. Okay. We already have a strong double-digit market share in the UV segment. It will further add to that.
Okay. And so one final question. Right now, given the fact that there is some bit of slowdown in the marketplace, of course, fuel prices were to blame too. There were insurance costs which went up for consumers. How do you see the marketplace shaping up? And also in the light of the commodity costs which are going up, price hikes have been taken. So in a dull demand environment, how do you see things shaping up for the automotive division for Mahindra & Mahindra?
I think we are all very concerned. The entire industry is very concerned at the way these headwinds have been hitting us, as you named, the interest rates, the fuel prices, the insurance costs going up. We had floods in Kerala. The festive season has not been very good. Consequent to all this, the sales have been much lower than anticipated. Growth is not, it's flat. UV growth is flat. And the sentiments going forward don't look very great. Okay. So we are all very concerned, and we are hoping that the sentiments turn around, and now we can see some fuel prices getting correction, right. Some announcements about more certainty in the RBI governor getting announced. Hopefully, we are really waiting that all these headwinds disappear and we have a good growth in the last quarter.
All right, on to the markets then, and we've got the Nifty as well as the Sensex holding on to gains. Nifty precariously close to that 11,000 mark, so goes to see if we manage to take it down in today's session, 10,972. We've got our technical analyst joining in right now. Manav Chopra is here with us, along with him Ruchit, Jain too, on the show. Gentlemen, thanks very much for taking out the time. Let's take a look at the index strategies at this current juncture. We are almost at 11,000. What would the call be right now? Manav, take on the Nifty and whether or not it makes sense to look at some, out of the money options at this point in time to take a play on the upside.
See, the markets have seen a very good breakout. In fact, to our last week's interaction, where we clearly stated that even at 10,650 levels, this momentum is likely to continue on the upside, and 11,000 was our target, which is nearing to its target zone. But most important thing is the way the overall formation is and the structure is playing out. I sense this move will continue on the upside. One should continue to maintain a buy on dips approach. On the lower side, 10,800 for the Nifty would be the support areas. Since we have already rallied roughly around 400-500 points from the lows, I don't expect on the immediate basis this move to continue. So going for a call options or any option strategy, and since the expiry is next week, I think it's recommended that one can look to buy Nifty futures instead, or even Bank Nifty futures. But on the upside, we maintain our targets of 11,200 and 11,400 for the Nifty. Bank Nifty particularly, it has seen a good series of momentum going forward, and every rise, even the rise today, has witnessed a higher volumes across the banking space, and the gap up pattern which is sustained. I think this momentum is very positive for the Bank Nifty, and 27,800 would be our targets on the upside. And PSU banks are looking very well poised, and still we are bullish on the PSU banking space, and I think one can still maintain an upside target of at least 10 to 15% from the broader PSUs.
Okay, Ruchit Jain of Angel Broking also with us. Ruchit, how are you approaching trade today? Do you concur with Manav that it's and I hope I got Manav correctly, but is it a buy on dips, or would you be comfortable with the trend and put in a buy even at the current levels for either the Nifty Bank or the Nifty?
Yeah, hi, very good afternoon, Neeraj. Certainly the trend for the market, we may say that the momentum for the market since last 5-6 trading sessions have been positive. Now today we have seen that this is the second gap up opening in last 3 or 4 trading sessions, and usually such gap up openings, and whenever we see follow up moves, those are called as a continuation gaps, and they lead to continuation of the previous trend. So I don't think we would see any significant decline from current levels. Even I know yesterday in the FNO show we spoke about that how put writers are very active and they have added positions near 10,800. So 10,800 has now become a support base for the rest of the series. So I believe that this momentum is likely to continue without any correction, at least for next few trading sessions. So any existing longs should be held on. Fresh longs, if anyone is looking to enter fresh, then I would suggest to go with a Bank Nifty rather than Nifty, because the index heavyweights such as ICICI Bank, they are even to an extent some other PSU banking names, SBI and other names are showing much clear direction. So I think there would be outperformance in the Bank Nifty index compared to Nifty going ahead. So if one has to take any fresh positions at current levels, one can go long in Bank Nifty, keeping a stop loss below 27,120 and expect targets around 27,700 to 800 in near term.
Okay. Specific stocks. Manav, I want to come to you first. And what are the recommendations that you are making today?
Yes, my first buy call is on Siemens. The stock, after a good series of decline, has formed a good base formation and witnessed a good breakout today on the daily perspective. Most importantly, the volumes are also confirming a good volume spike as it's closing above its 20-day average volumes. The prices have started to form a series of high tops and bottoms, and the oscillators are also indicating a trend reversal on cards. At the current levels, the risk reward ratio is also favorable. I recommend a buy into this with a stop of 980 on the lower side for an upside target of 1120. My second buy call would be on Bank of India. Prices on the monthly and the weekly charts are showing a good series of positive divergence built up on the momentum indicators and a breakout on the weekly charts. The prices after a good long time has closed above both its 100 and 200 DMA. And since the PSU banks is something that we have a positive stance on, I think Bank of India could see that extra alpha and extra returns in the near-term perspective. A stop of 92 on the lower side, and we expect an upside target of 105.
What about you? Your ideas?
So even one of my recommendation is on a PSU bank, that is Bank of Baroda. Probably firstly the PSU bank index has given a breakout, and I know Bank of Baroda is one of the stocks which has seen a consolidation phase in last 1.5 months. Prices are near the breakout level, and hence we are expecting a good move in the stock in next few trading sessions. We are advising to go through options. 120 call option, which is trading around 1.5 rupees, could be bought at current levels for target of 3. And my second pick is a buy call in Oberoi Realty. Recently, we have seen a breakout from an inverted head and shoulders in Oberoi Realty. Post that, the formation is quite positive because the up move has been supported by good volumes, whereas the correction which was there were very low volumes on correction. So even from current levels, the target is quite far from where the stock is trading. So the risk-reward ratio is also favorable. We have seen the other names from the realty names such as DLF has given a breakout in today. So I expect some positive momentum in this sector. Oberoi Realty can be bought with stop below 454 for short term, expecting target around 540.
Okay. Stay on, Jamin. Let's, before we get in our fundamental guests, let's figure out 2 or 3 stocks which are buzzing in trade. Sharad Dubey is standing by with his list. Sharad.
Afternoon, Neeraj. The first stock I've picked up is Reliance Communication, which fell by almost 13% today in intraday trade. This has been the highest intraday fall since September 21, and it's the worst performer of BSE 500 index. This is based on the news that Economics Times reported that Department of Telecommunications have not approved the deal to trade airwaves between Reliance Jio and Anil Ambani-led telecom company. This is due to non-confirmation of guidelines. The second stock I've picked up is Marico, which is up by almost 3%, its highest level in almost 3 sessions. This is based on Antique Broking's note with a buy price, maintaining a buy target price of around 403 odd rupees. This is based on the news of a start of a deflationary cycle for copra. You see, copra prices have declined about 20% on a year-on-year basis for the third quarter. Apart from this, the EBITDA margin will also expand by around 240 basis points in the second half of FY19. To around 20.2%. The third stock I've picked up is Bata, which is up by almost 2%. The stock has hit 52-week high. Today in the morning itself, CFO Ram Kumar Gupta told to Bloomberg Quint that the company expects its festival sales and also expects upcoming end of season sale, which will boost the revenue this quarter. Apart from this, the footwear maker expects to benefit from rising sales of its premium products, which will contribute around 35% of the total revenue. Back to you, Neeraj.
Thanks a lot for that, Sharad. So those are some stocks to watch out for. Neeraj Dewan of Quantum Securities is our fundamental guest on the show. He joins us right now. Neeraj, good having you as always. Thanks much for joining in. What's the fundamental impact, Neeraj, of what the RBI has done on the OMO front for the NBFC space? I think the general belief is that liquidity is easing, rolls are happening. It's not as bad a scenario as it was in September, and that's fine. But the business for NBFCs will slow down considerably in Q3 and Q4 compared to what was in the first half. Is this momentum that we're seeing, a revival of momentum in the NBFC space, here to sustain, or do you think after the initial pop it will cool off a bit?
Yeah, good afternoon, Neeraj. I think, what is happening is that there was so much scare about liquidity some time back that there was a need to inject some liquidity into the system to get the confidence back, not only for NBFCs, for the whole market. So I think that is what is happening, and we've seen a good bounce back from those bottoms that we saw for NBFC stock. But you're right that the kind of growth that we were thinking that most of the NBFCs will have, about 6 months back, we had NBFCs which were growing at 30-35% last so many quarters. And we were all making a projection based on that growth will continue. But yeah, that growth will not continue and it may not come back so soon. And this third quarter definitely can be a washout quarter. There can be a lot of disappointment in the third quarter. But then those are expected in the market. Going at also, most of the NBFCs which are growing at 25-30% may grow at 15-20%. So we'll have to taper down our expectations as far as growth of NBFCs is concerned. And second point, the momentum that is there in NBFCs, it will all depend on stock specific. You have to see which NBFCs will still continue to grow at 20% plus. So you'll still have some NBFCs which even, there may be some slowdowns, but still growth will be 20%. And with the stocks correcting, I think even at the current prices, the stocks will not be very expensive. So one has to be very stock specific as far as NBFCs are concerned and stay with only some of the leaders in the specific sector which they are lending to and continue holding them for a long term.
Neeraj, what's the sense with regards to the performance of the broader markets in this leg of the up move that we've seen for the mid caps and the small caps? They have been performing relatively well, and you've seen most of the mid caps and small caps giving good gains and good returns over the last few trading sessions. You have got picks as well, and you're focusing on the broader markets this time around versus some of the large cap names.
Yeah, basically, see, what is happening is that, in the large cap space, when you see Nifty, if you compare it to historical averages, you're not finding Nifty at a discount. It is still fairly valued. But when you go down and you see some of these, active mid caps or, mid cap stocks, then you feel that there is value because those stocks have corrected so much from February till September that some of the stocks have come down to 40-50% of the peak that they saw in February. So there, and the companies have been growing. It's not that they've stopped growing and there was a loss. The companies have been growing quarter on quarter, year, and they still reported a growth of 15-20% to the top line. Profits also growing in line. So there will be value in the broader market. So though in the Nifty also you'll find value in specific sectors, specific pockets, but as a whole, the large cap space you'll find less value, upside potential than what you find in the broader market. And with the correction, I think the correction as far as mid cap and small cap that we've seen this year, I think the correction in at least mid caps is already over. That's what it looks like with the price action on the mid caps.
Okay. I just want to pull up the mid cap index MRR function today, and you will see that it's peppered with gains to the NBFC space. Almost everything which is in that pocket has done well. So when I was talking about broader market, we were talking about what's happening to the NBFC space. I think that's the confluence of stocks which we need to talk about a bit in the session today. Then we'll also talk about some of the ideas from Neeraj, Dewan. But that's the point that I'm making. L&T Finance Holdings, Shriram Transport Finance, Motilal Oswal, Chola Mandalam, LIC Housing Finance, Dewan Housing. That's the set of names which have done really well in trade today. What's your favorite NBFC right now, Neeraj?
Actually, the top picks that we have in NBFC space would be Sundaram Finance and LIC Housing Finance. We try to look at the multiples which they trade at based on the growth and the ROA that they have on a steady basis. Some of these prices which we have seen after the correction, market is giving them a price which is indicating a growth of only 5 to 10%. But we've seen that, if LIC Housing grows at 5-7%, they lose market share, which may not happen in the medium to long term. So that's why we're lacking specific on the specific price and valuation metrics. Sundaram and LIC Housing would be among the top picks in the sector.
Just stay on with us, Neeraj. Lots more to discuss and get your other stock ideas as well. SRF, Minda Industries, two more stocks that you like. But before we do that, onto our chart of the day segment, we've got Agam joining in to talk a little bit more about the infrastructure sector as a theme and what's been happening out there. Agam.
Okay. Okay, so I'm good.
All right. We will go to Agam in a few moments, but for the time being, just want to highlight some big movers in trade. Right now from the mid-cap space, as we've already spoken about it. Amongst the larger names in Asian Paints, obviously in the back of the steep drop in the crude oil prices, 3.5% now, so 1,400 for an Asian Paints. Within the auto pack, you've got a Bajaj Auto about 0.5% higher. The Bajaj Twins are doing relatively well this afternoon, so 2.8% higher on Bajaj Finance, Bajaj Finserv, that's up about 3% as well. All right, I believe Agam's ready for us. Agam, good afternoon.
Yes, Devina, good afternoon. So the top 4 stocks are in the Nifty 500 with the maximum return potential that are tracked by 10 or more analysts belong to the infrastructure and construction sector. And while the Nifty 500 did decline by around 4.6% in the last 3 months, these stocks whose ratings were reviewed in the last 2 weeks of November have corrected between 25 to 50% in the same period and have seen deeper cuts. Now, the stocks may have fallen on the perceived risk of adequate or rather inadequate banking funding for projects, according to a note by Elara Capital, yet the set fundamentals of the 4 companies that I mentioned here remain healthy due to strong order book, which provides visibility to their revenues as well as progress on the financial closure. Now, the recent correction could be an opportunity to add quality stocks. That's what the note is suggesting. Analysts are optimistic about the return potential of these companies, and let's take you through what they're saying about each of these. So, Citi is positive on J. Kumar Infra Projects because of its order wins and a healthy backlog. NCC, according to HDFC Securities, has a robust execution and stability in operating margins. And Kotak Institutional Equities said that Dilip Bilkon Limited is a better place in gaining market share, while also acknowledging that its future remains challenging. And of course, Anand Rathi is positive on Sadbhav Engineering Limited's realization of advances with projects in the second half of this upcoming financial year. And that's possibly why we are seeing such high return potentials for each of these 4 infra and construction companies.
All right, Agam, thanks very much for that. So fundamentally, stocks looking good, and we have a larger potential upside for some of these names. But on the charts, Ruchit, the likes of J. Kumar Infra Projects, NCC, how do they stack up?
I think within this space, we like NCC technically also, because last 1.5 to 2 months, whenever there has been up move in the stock, that up moves have been supported by good volumes. And even in today's trading session, if you see, the price is up by 4.5%, which has been supported by very high volumes. So from a short to medium term perspective, I think NCCB could be an outperformer within this space. J. Kumar Infra Projects, this has been an underperformer. If you see this calendar year, the stock prices have corrected quite significantly. And this up move, which we have been seeing since last couple of trading sessions, I think this is just a pullback rally within a downtrend. I don't see any significant upside coming in. 160 to 170 would act as a very strong resistance. So, in J. Kumar Infra, technically, I believe that this is a sell on the rise counter where 160, 170 should be used as a potential to exit from existing longs, if any, and then one can shift to NCC within this sector.
Okay. That's on the infrastructure space. We've got 2 more stocks to discuss with Neeraj Dewan. We'll start off first with SRF, Neeraj, and why you like this one. He places a price target of 2,564 on this one.
Yeah, basically, SRF, we've been tracking this stock for the last 4-5 years now, and I think that the foray that they had in the specialty chemical business, I think really doing well for the company, and they've been able to increase
line. We'll have to reconnect to that line, slightly patchy line, but just try and reconnect that. It's up about 1% today. We'll try and get back to Neeraj Dewan. A couple of charts that we want to bring up and maybe talk about them in detail while we just wait for the line to get ready. One of them is on Sterlite Technologies. It's a chart that we showed in the morning or in the Hot Money show as well, which showed how SRF is trying to take, or Sterlite Tech is trying to take support at some key technical levels. And if it breaks out of a certain channel corridor, then it could do well. This is the chart that we're talking about. And look at the kind of trend lines that Sterlite Tech has made over the last 1 year. And it's definitely trading at or near those support levels. Now, Manav, I know you don't have the liberty of seeing this chart right now, but if you pull up SRF, it's trading very close to, or Sterlite Tech rather, it's trading very close to the bottoms, the trend line of the bottoms that it has made since June 2018. Does it look like a stock that could give you trading returns?
I do get so if you are drawing the trend line like you mentioned, Neeraj, it is definitely indicating that this is the third point where the prices, after declining from its 400 highs, have again tested its trend line support of 265, 270, and on the daily charts, the prices have validated as it has bounced from the support zone. So one can definitely initiate a long positions as your risk reward ratio is very much in favor. And when we look at the when we also look at the price oscillators, they are also bouncing from the oversold levels. In case if the prices manage to sustain and hold above the support of 280, I think we could see a retracement rally towards its long-term averages, which is close to the levels of 330 and 340. So one can definitely go along. The stop loss can be placed below 280 for a short-term positional view.
Okay. I believe Neeraj Dewan is back with us. Neeraj, we lost a line in the middle while you were talking about SRF. Please, can you start from the top as to why you like the stock?
Yeah, basically we've been tracking the stock, and for the last 3-4 years, and since they expanded their capacity in the specialty chemical business, they've been able to increase their top line, quarter on quarter over the last so many quarters now. And specialty chemicals is a high margin business for them. And they're phase by phase expanding capacity. They're also going into some pharma grade specialty chemicals. So they, because of their presence in specialty chemicals, packaging, technical textiles, so they have, basically a diversified mix. And the last couple of quarters, we've even seen that the technical textile business and the packaging business have also shown some improvement. So I think the improvement that we've seen will continue, and we purely on valuations also, we have a target of 2,600 for the stock on FI20 basis. And I think the stock right now will be trading at less than 10 times EBITDA. And the ROC of the company is strong at about 18-20%.
All right, that's SRF for you. Neeraj likes the stock and has placed a price target of 2,564. The other one that you like is Minda Industries. Obviously, the stock did well post its Q2 performance, came in above street expectations. But what is the reason that you're liking this stock?
See, what has Minda done in the last 2-3 years is they've been consolidating their businesses. So whenever they were only 50% partnership, they bought out the other partner and increased their share there to 100%. They've been able to foray into new products, like they added wheels to their portfolio. So they've been able to expand their product basket and consolidate their business. And because of this reason, they've been able to improve their margins. For the last about 7-8 quarters, they've been quarterly improvement on margins. So now the result of all this is that the return of capital employed is really very good for the company, and the top line improvement will continue because of their new products and the capacity that they've added. And they have a mix of when they are into 2-wheelers, 3-wheelers, 4-wheelers, commercial vehicles. So they are present across the segments. They're not concentrating only on a particular segment of automobile industry. So that also gives them a diversification. So based on valuation, we have a target of 480 rupees for the stock of FI20 basis. Okay, got that. So a few stocks there from Neeraj Dewan. We have lots more to discuss. Half an hour more left to go for us to shut shop trade this afternoon, and most likely going to shut shop in the green. So the 7th straight day of positive returns for the Indian equities. We're going to take a very short break here on Countdown. On the other side, we get you the Fab for stocks of the day. We talk about dealing rooms and what they're recommending at around 3:15, and then get you some closing strategies as well. Take that break.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments. good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with countdown right here on Bloomberg Quint. 28 minutes left for the markets to shut shop, and we're trading reasonably well for ourselves. 0.5% higher, no complaints whatsoever. The mid-cap, the turnover should come up on your screen, and then we should also have the European markets once to see what the world markets are up to. Volumes certainly high. Cash market volumes northwards of 30,000. I reckon we would nudge 32 or 33,000 on the cash side, which is not bad. FNO volumes, well, it's not the FNO expiry day, but 7.5 lakhs or thereabouts. So not bad either. World markets, very quickly. Europe should come up on your screen and just show you what that is doing. Well, fair degree of green ahead of the FOMC decision. Dow futures, I would reckon, would be slightly quiet. Well, actually 0.5% higher. Let's wait and watch. Ahead of the FOMC, I would have thought that it will be quiet. But that is interesting. Okay. This is Bloomberg saying that a couple of news. Government is going to seek additional 40,000 crores for state-run bank recapitalization, and select banks. I mean, most banks, SBI, interestingly, is not a part of the recap. Maybe they don't need it. But there is, and Bank of Baroda too. But there is another flash that came on the screen, which says that Bank of India and Allahabad Bank may be soon out of the prompt corrective action rule. Now, now you can kind of place some reasons and some logic as to why is it that the market was getting excited post December 10th for the PSU banks, because there would be some degree of difference in the way the earlier dispensation and the current dispensation would approach the NBFC liquidity and the lending and the strictness around the lending for the PSU banks. And I think that was the market pricing in. If these flashes or these statements do come out to be true, then you're actually looking at it.
It should be a good thing if we could actually get the MRR function, customize it for, starting the 10th to see if the Nifty PSU index and particularly the banks, if there has been a substantial uptick, which it has actually, because we've spoken about it a whole lot post the appointment of the new governor, that most of these stocks started to rally up.
Actually, the last 7-day charts, even if not the MRR, the 7-day charts of almost any of the PSU banking names would show you. And but that's your answer. Bank of India, Syndicate Bank, Punjab National Bank, Central Bank, all of those names on your screen. And look at the quantum of green that we've seen for them. 25%, 22%. That's the list of names. Not surprised there.
Yeah, and Bank of India today as well is one of the top gainers, 25% higher over the last 7 days for most of these names.
Just getting a thought from Neeraj Dewan on this. Neeraj, we talked about NBFCs. What about the PSU banks? Some of them, officials are saying to Bloomberg that some of them could be out of the recap PCA framework. There is an additional 40,000 crores being sought for state bank recapitalization, and the larger ones are not going to be a part of it this time around. Is it a move that will be seen right now, and we've already seen that? Is it a move that will die down, or do you believe there could be some more constructive moves in the PSU banking space?
See, as far as corporate lending is concerned, I think we've seen some improvement happening there, and we've seen that there is demand which needs to be fulfilled as far as the capex of all these corporates are concerned. So PSU banks have always played a very important part there. So keeping that in mind, I will think it will be good to have some investment in PSU bank, but then I will still stick to the larger one and where I feel more comfortable as far as the working is concerned. Just because of a trading bounce that we were saying some of these stocks which may come out of PCA, I'll not really go and make an investment call on these stocks. They are more or less a trading bounce in which may see a short-term peak once you get an announcement out. So I'll still focus more on banks like the State Bank, Bank of Baroda, Canara Bank, where I feel they have the capital and they can grow from these levels and they can really contribute a lot as far as the corporate requirements are concerned. So I'll still stick and focus on these large ones.
Got that. Neeraj, we leave it at that. Thanks very much for joining us. Appreciate you taking out the time. So that is Neeraj Dewan there talking about his ideas within the stock markets and what he likes and what he doesn't. We'll take a few chart checks as well from the PSU banking space, but in the meantime, time to take a look at Yash Upadhyay's list of Fab 4 stocks for the day. Yash, what have you picked up?
Afternoon, Devina. I'll start with Jubilant Foodworks, and that one is in focus. Up almost 4.5% today on the back of that Phillip Capital report, wherein they have maintained the buy rating on the stock, but they have hiked the target price to 1,845 rupees, which indicates a potential upside in excess of 35% from these current levels as well. So watch out for that one. The housing finance companies, they are in focus. So Indiabulls Housing Finance, Indiabulls Real Estate is also up because of that. So Indiabulls Housing Finance for one is up close to 8% after the central bank said that it would be buying 10,000 crore worth of more government bonds in order to boost the liquidity. Dewan Housing Finance is another name, up 5% today, gaining for a second consecutive day after the company said that it would be completely exiting from its mutual fund business, wherein they are going to sell their entire 50% stake to their joint venture partner Primerica. And the softening of crude oil prices, that is a key positive when it comes to the aviation name. So Interglobe Aviation, that one is up 3.5% today after crude oil prices overnight fell by more than 5.5%. Back to you.
Okay, great. Thanks a lot for that, Yash. That's the Fab 4 stocks of the day. Manav, your recommendation on Bank of India? I mean, obviously, it's yet not met the target price of 105. But if you want to add on to some positions here, should one look at it now?
Yes, absolutely. In fact, it's all about taking the momentum, and most of the PSU banking space have witnessed a good bottom formation on the higher time frame, that is the weekly and the monthly charts. Let me talk about Bank of India or Canara Bank or even BOB. As I have also highlighted in our past interviews in last week, where most of the PSU banks were showing a good bottom formations, and I had mentioned that we can see a very swift rally of at least 15-20%, which we have to gear up for. I think we've already seen that 10-15% come on, but I think another 10-15% is very much due on the cards. So Bank of India, for the intraday specifics, can also be initiated. I mean, one can still take a short-term view for our next couple of trading sessions, but I think it's time for someone to take a positional view on the PSU banks, because I sense even holding for another 3 to 4 days, one can still get that extra 10-15%. And most importantly, the volume built up that we've seen in the most of the PSU space at very deep oversold levels is indicating a very good, long things which have been created. And in the past, since the prices were in deep oversold levels, there has been a very short covering which has happened. I think eventually this all piled up can see a series of up move into the PSU space.
Okay, got that. Siddharth Sedani is also joining us right now from Anand, Rathi. Siddharth, good afternoon to you. While we're talking about the markets nudging 11,000, and Neeraj spoke about how there has been excitement in the broader market space, and most of his picks actually were in the mid-cap space. Would you say that you can look at the slightly high beta names now, and move to the slightly more riskier names than just being pure defensive and just playing, the plain vanilla large cap names for an investment purpose as well?
Good afternoon, and thank you for having me on the show. I would be a little cautious as of now. I would not like to go very aggressive on picking up little riskier stocks. Although there is good sentiments on the move, there are a lot of better macroeconomic factors which are impacting the market, which is where market is taking it very positively and going northwards. Having said that, we still again believe one has to be little cautious, not on the domestic count, because domestic we don't have much of an event which is lined up immediately except the earnings season. But I think global issues can crop up more. There are several things. There are somewhat correction which is seen in the American markets. So global issues, of course, trade war truce is always there in January, but you never know. You can always say that this is something which is very unpredictable. So overall perspective, we still believe we will be a little cautious. Of course, not going with complete risky assets. We would like to again stay back in some quality space only, at least with the next 3 to 6 months perspective.
Okay. What would those spaces be, Siddharth? I mean, I don't specifically come to you within the auto pack. Obviously, that doesn't make an appearance on your list. Separately, the auto pack, and I believe you had a call on Jamna Auto the last time we spoke.
We are positive on Jamna Auto. We have a hold rating in Jamna Auto. We still believe in the commercial vehicle because 70% of the business which they get is from the commercial vehicle space. And there are a little bit of hiccups in the sales numbers in entire OEM space, if you include passenger vehicle, commercial vehicle, or two-wheeler for that matter. But we still believe Jamna Auto, being a specialized play, strong company with good cash flows, good balance sheet, is a good company to be in the OEMs, in the auto ancillary pack. Along with that, added to this, Sundaram Fastener is also one of the auto ancillary play which we really like. And we believe that the kind of capex which they have done in the past and a strong parentage which they have, or good operational efficiency which company possesses, I think Sundaram Fastener is also one of the auto ancillary play which we are liking and which we are very positive on. If I talk about the entire OEM space, we are a little constructive over passenger vehicle. Is just because of we believe that there can be little pickup in terms of sales numbers are concerned in the passenger vehicle space because of December quarter. You know that subsidy benefits are there. So overall depreciation benefits. So overall perspective, I think passenger vehicle looks little attractive compared to the other space in the OEM category.
Okay, I'm just looking at companies which have done very well the last few days. I think Symphony as a stock stands out. I was talking about this yesterday as well. In today's session, to another 5.5% up. Look at the 7-day chart. I think it's gained over 15% at least. Must be close to 20% maybe, but over 15% at least over the last 7 days. 23% over the last 7 days. It's been almost a one-way move for this one. Was a beaten down name. I don't quite know if this quarter would look much better than the previous two. This year has not been particularly great, but the last 1 month looking quite robust. Any thoughts here? Have you guys looked at the cooling solution companies, Siddharth, be it Symphony or maybe the likes of Voltas and others? And is there merit in trying to own them?
Absolutely, Neeraj. I think Voltas looks very interesting to us. In fact, the round of news which is going on of reduction of GST also is something very positive for the company. But apart from that also, because consumption is 50 to 60% of the contribution to the revenues of the company. Apart from that, engineering business has been really clocking very well. If we talk about any of the capital goods space or engineering space, if I talk about Siemens, CVB, L&T for that matter, all are clocking good set of numbers. So talking about that, Voltas engineering business has also been turning around. It's been posting good numbers, strong order book which has been seen. So all-round performance, Voltas looks very interesting to us with a target of 680. One can always look at this company with a 3 to 6 months horizon also. And we believe that the performance will be really clocking in coming quarters.
Okay, stay on, Jamin. Time now to take stock of what DD groups are recommending in the session today. Yatin Mota is here with his channel checks. Yatin, good afternoon. What are you learning?
Good afternoon, Neeraj, and of course we are at the 11,000 Nifty mark. A couple of stocks to talk about, and as far as the first stock is concerned, we have a couple of these PSU banking names as well as capital goods name, wherein there is a lot of action. In fact, Siemens crossed that important 1,000 rupee mark today, and dealers do indicate a buy today, sell tomorrow kind of a strategy. Similar is the case with Bank of India. and a couple of other mid-cap PSU banks wherein domestic funds are said to be buyers here, almost 6% up for that one. And if you look at Bank of India for the past 2-3 days, there has been continuous momentum coming in for most of these names. And finally, we have the entire IT pack, and yesterday also we were highlighting the fact that there is a lot of fund selling which is happening in the IT stocks, and today also most of them down. TCS, Infosys, HCL Tech down anywhere between 1 to 3%. So good amount of selling as far as IT stocks is concerned, and dealers do expect the entire pack to remain under pressure. So again they reiterate the weakness stance as far as the IT pack is concerned.
Okay, great. Yathin, thanks very much for that. So IT and focus nonetheless. Just pull up the currency once again, and an intraday chart would be more interesting. The way it started off for the rupee, that's the currency now at 70.33. So made its high of about 69.9 odd, and then from there on it's come back down to 70.33. So still strength is there, but not as much as we saw in the morning session.
Would it also be a factor of the Reserve Bank going out and buying some dollars as well? That's the other question you got to ask, right? Because all through when the currency was depreciating meaningfully, the Reserve Bank intervened. Could this also be that? I don't know. But that could well be a factor as well, right? There's
building up their forex reserve.
Yeah, there's a sudden and sharp move there in the currency in the session today after starting off so well. So, well, you never quite know what.
And, and since we're on the topic of currencies, and Yathin was just highlighting the moves on the IT and the pharma pack, let's get in a sense. Siddharth, now that we're seeing an unfavorable currency for both these pockets, do you see a significant downturn in IT particularly?
Well, the IT large cap will definitely face some volatility in terms of their earnings and revenues is concerned. But mid cap IT, we still believe that there is quite a good certainty in terms of earnings and quarterly results, which they will be posting going forward. Short term, it's sentimentally negative because of pharma and IT being the biggest exporter. So sentimentally, there can be little weakness for a few weeks for that matter. But again, it would be completely a stock-specific move. Companies like L&D Technology, which has been really posting good set of numbers, in fact, better than any of the IT mid-cap peers. I think these companies, which are specialized in many sectors like transportation, so on and so forth. I think these specialized companies will be doing far better than the generic IT service providers. So we are focusing towards specialized companies rather than generic IT service providers.
Okay, looking very strong for most of the stocks. Let's quickly get in closing strategies from our experts before we move any further. Manav, Chopra, your top closing strategy for the day.
See, at the current level, Tatacom looks very well placed. The stock after a good consolidation has given a breakout on the daily perspective, and also on the weekly, monthly, it's very well poised. But taking it only for a short-term perspective, I think the momentum indicators have come into the buy mode after 10 days of move, and I think the volumes are also confirming the same. We recommend a buy into this with a stop of 540 on the lower side and expect upside target of 585.
Okay, Ruchit, what about you? Your top closing strategy?
I would recommend buying Bajaj Finance from a BTST perspective. Primarily, if you see today's session in the morning, the stock gave a breakout from its earlier resistance of 2560, and this breakout was with a gap up opening. The entire day we have seen a positive momentum wherein very good volumes have also flown in. So I think this would continue for tomorrow's trading session also. At current levels, one can go long for BTST with stop below 2550, expecting target around 2580.
Bajaj Finserv was a buy yesterday, if viewers would remember, 4.5% at 6421 so that one has bounced back very strongly. Axis Bank is 3.5%, and Indiabulls Housing Finance 8.5% higher.
Actually, most of the housing finance companies last few days have been on a tear. So be it the likes of an Indiabulls Housing Finance, Dewan Housing Finance, LIC Housing Finance, Repco, Canfin, all of these names have managed to put up a really good show in the last few trading sessions. One pocket though that has seen a recent spur of interest has been the real estate pocket, and in fact we spoke about this pocket being the missing link in the current industrial cycle. These are views coming in from Pramod Gubbi of Marcellus Investment Managers. He had a chat with us earlier on today. Listen in.
the underlying policy doesn't change materially, irrespective of the results of the elections, right? Across political parties, they've either picked on one strand or the other from the previous regime and continue to deliver on that front. So from a medium to long-term perspective, nothing changes fundamentally. Yes, the market reaction might be adverse in one case and not so much in the other case. Depending on that, you might see that as an opportunity if the market tanks on what is perceived to be an adverse result. It's an opportunity to buy in, or like you said that if the market runs away on the back of it, big deal. But from the long-term perspective, you're still on a strong wicket fundamentally as far as policy making is concerned.
Okay, I have one question, which is on the point that you made earlier that companies related to capital expenditure picking up might benefit. Now, it's a very large pocket as well. What do? Do you buy the mainstream companies? Do you buy the ones which could expectedly get more orders coming in, or do you buy the ancillaries? Because there's different ways to play this.
Yeah, I think asset developers, we've seen Indian investors have suffered quite significantly in the last cycle because, these require immense amount of balance sheet commitments, which again have to live with the uncertainty in terms of approvals, financial closures, and all sorts of environmental approvals and so on. So you don't want to be committing a lot of capital and be stranded. So to that extent, I would agree asset developers are perhaps not the best way to play, particularly infrastructure. You're better off looking at well-run EPC companies, construction companies who can take the P&L and cash flow play rather than the balance sheet risk and piggyback on these infrastructure orders that we're seeing from the government. Particularly public infrastructure is currently picking up. Outside of that, I think capital goods is perhaps a better way to play. Like in some ways, they are ancillaries as well. These are guys who, supplying equipment. Could be even commercial vehicles if there is a clear recovery in the industrial side.
All right. So that's the view from Pramod Gubbi as well. IT and pharma looking wobbly, but NBFCs by and large looking okay. Not all banks are looking okay though. Manav Chopra, if I had to pick up Axis Bank because that's the standout. The others, the HDFC banks, Kotak banks of the world are in the red. Axis is up about 3%.
Yes, in fact, from the PSU bank space, Neeraj, we will continue to see this sort of a distribution whereby only select banks will continue to outperform. Axis actually since past, if you just bar today, since last 10-15 days, it was in a broader sideways consolidation. But most important thing is that, the prices are consolidating and eventually seeing a breakout on the upside. So it may happen for a stock today or it may happen for other stocks after a few trading sessions. But since Yes Bank has seen a good breakout today, it has definitely come down from the day's high. But, a weekly close above 630 could be very positive for this stock going forward. And I sense this stock is likely to see, come to an all new, zone. So Axis Bank will not be surprised to see if it's close to the levels even it crosses 700 in next 2 or 3 months. HDFC particularly, HDFC Bank has seen already a good series of up move and it has stiff resistance at 2150 on the upside. So this stock could see a short-term consolidation, but eventually I think the right time to enter this stock is only if you get a short-term decline towards the levels of 2050. But if you talk on a medium-term perspective, I think 2250, 2300 are the targets for HDFC Bank.
Interesting. The PSU banks quite active in the last half an hour. We've just had them move up, and obviously the news is out there for everybody to see. But just look at those moves. Corporation Bank, Vijaya Bank, even a United Bank, and some sharp upticks into all of those. Not the large ones, which have not been included, but the mid-sized ones. Vijaya Bank is up about 9%. Corporation Bank is up about 4.5%, but a large share of the move happening in the last few minutes of trade, last 15-20 minutes of trade. Any of these stocks that you would look to trade, Ruchit? The mid-sized, small-sized PSU banks?
So among these names, Vijaya Bank looks to be poised for a pullback move because last 1.5 months the stock prices had consolidated from 46 to 40 on the lower side. Now today there is a breakout which has been supported by good volumes. This should approach its 200 DMA first, which is around 42.5. So from current levels, if I have to pick anyone from this mid-sized PSU from a trading perspective, then Vijaya Bank could be bought with stop loss below 45 rupees. The first target would be for 52.5, and if 52.5 is crossed, then we could see this momentum up to 54.5 levels as well.
Okay. Thanks a lot for that. Let's, of course, talk about this news flashes that came, and Siddharth Singh of Bloomberg News is joining us on the phone line to talk about those. Siddharth, thanks so much for joining in. I think the equity markets will take it well, but what are you learning? The flashes that we got spoke about a couple of banks likely to be out of the PCA framework and additional recapitalization for some of the smaller sized banks.
Yeah, basically what we are getting to learn is that tomorrow government would be placing the second supplementary demand for grant before the parliament, and they're expected to seek additional recapitalization of state-owned banks to the tune of 40,000 crores via the recapitalization bonds. This would be in addition to what was already been budgeted, that was around 65,000 crores, and some of this capital would be infused in most of the small as well as medium-sized banks, except the bigger ones like State Bank of India, Punjab National Bank, Bank of Baroda, Indian Bank, which would not be part of this recapitalization as they are already meeting their capitalization norms. Plus, what we are also hearing is since this recapitalization as well as improvement on part of some banks on NPA front like Allahabad Bank, Bank of India, Bank of Maharashtra, Corporation Bank, so they may on twin accounts, one on their part improvement in the NPAs, bringing down the NPAs as well as recapitalization from the government, so that may see them coming out of the prompt corrective action framework.
So how soon can that happen? Any idea?
See, well, I exactly don't know by when, but I think this should happen very soon because they have shown, these four banks at least have shown a considerable improvement in their NPAs levels, as well as once the recapitalization comes in, I think these should be then out of the PCA framework. That's what we are getting to hear.
Okay, Siddharth, thanks for putting that into perspective. Clearly, these stocks remain the order of the day, the talk of town, and there'll be a story on Bloomberg very, very soon as well, at bloombergquint.com very, very soon as well with regards to the same. Just very quickly, Siddharth, Sedani, before we thank you, would you be a buyer in any of the small-sized PSU banks?
Well, it has to be very, very specific, stock specific, and that would be Indian Bank. Actually, the numbers have been coming good, and we believe the provisioning are also already done. Asset quality issues are mostly out of the way. Slippages are less. Overall, financially, we find that Indian Bank looks a little attractive. So, in the PSU banking space, maybe not with very small bank, but of course, with Indian Bank, one can look at with a 12-month horizon.
Okay, Siddharth, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Couple of minutes of markets going on, so let's start wrapping them up. 0.5% for each of the key benchmark indices. Okay, the Sensex has probably come off a little bit, but still not a bad close. The mid caps and the small caps too faring fairly okay, so no complaints really in the equity markets fund. A few hours before the FOMC announces the decision, the mid caps and the small caps too have done well. But let's talk about what's happening in the index, and then we'll quickly wrap up what's happening at the broad end of the spectrum too. Indiabulls Housing Finance, NBFCs and select financials by and large. So Indiabulls Housing Finance, Bajaj Finserv, Axis Bank, SBI, Bajaj Finance, that's essentially the pocket of strength today. Asian Paints and a couple of other stocks, because of the crude price fall too, haven't done too badly. We don't have too many losers, but for the exporters, so it's IT predominantly. Some of the private sector banks too, by the way, the likes of IndusInd Bank, Kotak Bank, etc. have corrected, but it's predominantly the exporting pack which just looks slightly wobbly. And yeah, the heavyweight private sector banks haven't participated, which is why the index per se is looking subdued or not as strong as we would have otherwise seen. But there we are, mid caps and small caps, a lot of buzzing stocks.
Well, they're the clear stars of indices themselves putting up a good show, about 1.25% higher on the Nifty mid cap as well as the small cap index. I'll start off with a few pockets that have really, made their mark in today's session. So it's the real estate stocks, it's the PSU banks that have done well, housing finance companies, and to start bringing it down and filtering it down to individual stocks. And Indiabulls real estate is up 8% by close. You've got a DLF from the real estate basket, which too is going to shut shop at the highest point of the day, about 8.5% higher. Within the banking names, we just got the news of additional recapitalization and a few of those banks coming out of the PCA. Stocks like a Bank of India, Vijaya Bank, Syndicate Bank, UCO Bank, United Bank, Indian Bank. All of these names are up on a tear in today's session. 9% on Vijaya Bank, UCO Bank about 4.5% higher. Within the housing finance companies, so not just Indiabulls Housing Finance, but in the broader market space, Repco Home Finance, Dewan Housing, PNB Housing, all of these stocks end with gains of nearly 5.5% apiece. The infrastructure space, IRB Infra, the last few days have been pretty exciting for the counter. NCC in today's session does well, so it's going to have a positive close to the tune of about 5.5%. Shrey Infra is the other one, smaller name, but nonetheless a good positive close. Capital First, gains of about 5% merger with IIFL. The stock doing well, 3.5%. Not at the highest point of the day, petered off a bit, but the last one there, Berger Paints on the back of crude oil prices coming off significantly overnight. Most of the beneficiaries, they're doing well, including the like of some paint companies like Berger Paints. But that's the final tally on the screen. Not yet managing to cut through the 11,000 mark, but still very close. It's a positive close nonetheless.
It's a positive close. I'm really interested in the turnover, Devina, to start off with, before getting into the market breadth, and just see if indeed it's picked up materially. The cash market volumes, Devina, you'll remember at 3 o'clock, I think it was at 30,000. A substantial volume build-up and 35,000 crores. This is not mean. This is above average compared to the last few days.
We'll have to see the delivery numbers as they come out tomorrow. And 7 straight days of gains, and this number has been picking up. So there has been some backing to it. And the futures and options side, it's going to be interesting to see what tomorrow's number is, because it's going to be the Bank Nifty options expiry day. That will be higher, but today's session nonetheless is also on the higher side. 8.34 lakh crores is a good number to go by.
Yeah. The market breadth would be positive, marginally that, but would be positive. So no prices for guessing that this 2:1 ratio has not crumbled, because this is what the indices were showing, so won't dwell too much on it. But the gainers and the contributors list, the market's doing well despite private sector banks on this side of the table.
HDFC, ITC, Axis Bank, SBI, most of the top gainers from the banking space. Losers including IT, obviously on the back of the sharp rise in the currency. That's taken a little bit of beating in today's session, but not as heavy enough compared to the gains that the index is seeing.
Yeah, interesting moves here. Anyways, final thoughts from our experts. Ruchit, I'll start off with you this time. Yesterday, the conversation was centered around how, if the market stabilize at these levels, then the mid caps and the small caps could have bigger bang for the buck. What do the indices look like, the mid cap and the small cap indices? Do you think that there could be, on a comparative basis, a better rally that we will see in those indices compared to the Nifty or the Nifty Bank?
Yes, Neeraj, if I look at the Nifty Mid Cap 100 index, then last 1.5 months this index has consolidated in a range, and 17,700 was the crucial resistance. Now today this resistance has broken out with a gap, and a follow-up momentum has been seen throughout the session today. So I think this is a positive sign that after 1.5 months this resistance has been broken. Now maybe for next 1 or 2 weeks, I think this mid-cap space would tend to show good outperformance, and the next resistance for this index is directly around 18,440, which is the 200 DMA and the 61.8% retracement of the previous correction. So certainly mid-cap stocks, I think, would be in flavor. For next 1 or 2 weeks, we would see some good outperformance within the mid-cap basket.
Manav?
I think most importantly, we will continue to see such kind of a sector rotation to happen, and the stocks which have been beaten down, and the stocks which have been in oversold areas in spite of being in a good trend, I think those would be the stocks to look at. So stocks like Siemens, Syngent, and stocks from the PSU banks will continue to see such a sort of an outperformance. For the Nifty, particularly as long as 10,800 holds on, we can still continue this momentum to go on the upside. So will not be surprised to see the levels of 11,200, 400. But with that, definitely pockets of the mid caps would continue to see some sort of an outperformance. So for me, if I have to bet on one, I think definitely I'll go for the PSU banking space.
All right, we'll leave it at that, gentlemen. Thanks very much for joining in, Manav as well as Ruchit. Appreciate your time. And with that, it's a wrap on this edition of Countdown. Thank you for watching. From Neeraj, myself, and the entire team that's put this show together. Coming up next is the Market Wrap.